Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guests today are Scott Eaton, who earlier this year became CEO of Nivaura, a business whose stated mission is to use digitized data and digital technology to cut time, cost, and risk out of the bond issuance process. And he's joined by Dr. Vic Arulchandran, co-founder at Nivaura. Scott, Vic, thanks for joining us.
Thank you.
Thanks for having us.
Now, Scott, perhaps I could start with you. The flagship product at Nivaura, which is called Aurora, aims to automate the primary debt capital market flows, the bond markets, the flows between issuers, dealers, investors, exchanges, ratings agencies, even, and lawyers, of course. Now, that sounds like I've described the problem very clearly, but what is the detailed nature of the problem which Aurora is actually addressing?
Well, you actually have done a great job of describing the problem. And what we're really trying to address is a couple of things. Bring a fairly outdated process into the 21st century. I started out my career working on bond deals 30 plus years ago, and the way bond deals are done today is the same way it was done then and the 10 years prior to that. So what we're really trying to do is digitize the process, so make it so it's streamlined and efficient, but also enable the capturing of data. So a lot of the stuff gets keyed in twice. You have a bunch of different actors that don't need to. Workflows get emailed back and forth between the players as opposed to perhaps simultaneously worked on and collaborated on. And those are the sorts of problems we're looking to fix. So it's about efficiency, it's about data, and it's about then having a process which is replicable and ultimately becomes an on-ramp, an off-ramp for future fully DLT type transactions.
Well, I'm glad you mentioned DLT, and we'll come to this possibly a bit later, but it sounds very much as though what you're aiming at is a kind of classic blockchain model in which all the parties to a transaction are seeing the data simultaneously and can rectify and add to and solve problems simultaneously as well. Would that be a reasonable characterization? I
think that's a very reasonable characterization. And in fact, if you think about it, the history of Nivaura starts with the FCA sandbox and Avtar and Vic, the two of the co-founders, recognizing that DLT had an application in bond issuance. And they went through and they were the first to ever do a digital bond issuance and did it in a regulated fashion. So I think absolutely, what the guys found, and I'm sure we'll cover this a little bit later, is that it was a great idea. They could prove that it worked and they could do it within a regulated framework. However, I think what they recognized was that at the moment, the regulatory framework beyond just the FCA sandbox is really not there. You have various rules, CSDR being one of them, that keep it from being really something that works for a soup to nuts DLT approach. And then alongside that, you also have the fact that the buy side really just isn't geared up for that, and nor are some of the infrastructure players. So I think that's what's interesting in my mind, is that you can start and still have that as your thought, but Nivaura, and in particular Avtar and Vic, were smart enough to say, okay, look, we can't keep going down that path. We need to actually put a framework in place which will allow people kind of a stepping stone to get there, which is the Aurora software.
Mm-hmm. Vic, you've been there since the beginning. We talk about debt capital markets and bond markets as if they are a monolithic marketplace, but in fact there are lots of different types of debt, aren't there? There's bonds, there's medium-term notes, there's commercial paper, there's even old-fashioned certificates of deposit. So which asset classes does this model that you built, the Aurora model, support at the moment?
We realized early on that while there are a number of different instruments we could be supporting in the long term, we needed to start with the sort of low-hanging fruits, get our technology built out and embedded with few customers, and then expand on the complexity of instruments that the product could support. So we chose to go with something that was program-based, high volume, that we felt we could automate the issuance of from the beginning. So we went with MTNs, specifically EMTNs in Europe. So these are, again, program-based instruments. The law firm set up a program at the beginning, whole host of documents, and then every time there's a drawdown, they take a couple of documents from there and they negotiate on the term sheets and they fill in the final terms and they execute. So what we did is we thought, okay, let's not start from too early on creating documents, but let's start from digitizing those documents once they're created and then allowing these digitized documents to be used for drawdowns whenever an issuer wants to do an issuance. And so we started there. We've also started working on things like swaps, structured products as well. We actually did some structured products issuances a couple of years ago. We have a client in Asia now who's deployed our technology to do commercial paper and certificates of deposit. So we're gradually, now that we've got the product built out and we're getting it, sort of every single piece of the functionality production ready, we're going to then expand into different instruments and more complex ones like structured products.
Have you, I'm sure Scott has a view on this as well, but have you, Vic, worked out how big the markets which you're going to address are? You've described very clearly you're starting with MTNs for a very good reason, that they have these periodic drawdowns. It's a good way of testing what you've built. And I guess bonds are kind of less active, aren't they? But from what you're saying, there's no reason why the technology shouldn't apply to fixed income instruments and floating rate instruments of all kinds. Is that right? How big is the market going to be, do you think, if you added it all up?
It's actually, so I cheated. I begged one of these earlier. So according to the OECD, average annual issuance in the corporate bond market has been running at roughly $1.8 trillion a year, and that's non-financials. And so what I think is particularly interesting, and I couldn't find the number for financial institutions, but if you think theoretically we could do all corporate bond issuance once the product builds out all the way, that's 1.8 trillion as a potential market. You add in the what financial issuance is, because there's no reason that a bank couldn't choose to do it this way. In particular, the structured products program. So years ago, I ran a desk that was all about repackaging bond issuance, combining a derivative with an underlying asset and then issuing a note. And that's the sort of stuff that's really easily done off a cellular issuance program, which is effectively just an MTN program. So the market is probably, $2.25 trillion per year in terms of total addressable market. And we would be happy with a sliver, a large sliver, but a sliver.
But am I right to think that you're, oddly enough, I know the outstandings in the secondary market, the total fixed income market, because I looked at the SIFMA yearbook the other day, it was like 94 trillion US dollars globally. And I'm sure that's probably an underestimate. But I guess your service is kind of irrelevant to the secondary market. Your primary market focus means you've got nothing to offer the secondary market. Am I wrong about that?
No, I think you're right in principle, right? So the product itself lends itself to, or is designed just for primary issuance. But I think ultimately what becomes interesting is anytime you digitize stuff, you then have a real usable data trail that can be analyzed, cut up, other things done to it. So it probably has value and relationships to the secondary market. At the moment, I don't know what that might be, but I always think about that data trail as always feeding various end users, and those end users being secondary traders.
Yeah, well, pricing new bonds, one thing, I guess.
Absolutely.
Yeah. Now, Vic, a technical question about that question of price. In fact, the primary market is going to consume and indeed generate a lot of price-sensitive information, quite a lot of confidential information about which corporates are issuing which type of debt, and prompt all sorts of questions about why they are. How do you keep this data secure?
That's an interesting question. Again, from the beginning, when we started developing the company and the idea from the ideation stage, we knew that simply providing a solution in the cloud wasn't going to be enough to address all of the problems in the industry, problems around data integrations, owning platforms, etc. So we wanted to make sure from day one that when we built the solution out, which we have done, that it could be deployed both in the cloud and on private cloud or on premises. And that's because we know, from our experience in banking before we started the company, and of course from talking to customers and potential customers over the last few years, we know how important it is that banks and various other firms have total control over the data they're creating and managing. So having solutions, for example, we can take our product and we can deploy it on premises or on cloud for our clients. It can then tap into their internal databases and store information there. So they then have total control over the data that's being created within their ecosystem. We also, of course, use various methods of encrypting data, both at rest and in transit. And we have been also working under the philosophy of something called zero trust architecture. So we're really thinking about how every single piece of data on any of our systems, any of our products, no matter whether it's deployed in the cloud or on premises, can be kept safe and secure and private, and can be given very granular access and permissions to different types of users. And that's one of the key things that we've kept in principle when we developed our solution.
Now, Vic, you've just said that the customer has complete control over their own data. You know, it's private. They have to give consent to it being used. A minute ago, we were talking to Scott and I were talking about how valuable that data is, say even secondary market data to participants in the bond markets. So is there a contradiction there? Is there a problem there between giving the customers full ownership and control of their data and the fact that if you aggregated lots of people's data, you would actually have something very interesting and very useful to everybody else? I'm not saying this problem is peculiar to the capital markets. It's clearly becoming an issue across all sorts of businesses throughout the economy. But does it place some kind of constraint on your growth? The fact that you have to say, well, this is your data, it belongs to you. I have to ask you if I'm going to use it. Vic, I was thinking it might be a question for you.
Sure. It is an interesting one. I think you can separate the technical side of it from the commercial side of it. So technically, we need to ensure our solution manages data appropriately, and we can ensure that we help our customers have control over the data. On the other hand, commercially, there are many other solutions in the market, like the data aggregators and sellers, who will pull in data from various places, not just buying data, but they scrape the web, they perform analysis, then they use it and they sell it on. We're in the business of supporting our customers who are trying to create instruments and develop these very, digitize their existing manual processes and have a very quick way of creating and executing instruments. And that's our core focus. There are also other commercial things we are considering around how the data is used in our system, but we're at the heart of it. We're not a data analytics business. We are a workflow, automation, low code, no code solution company, and that's our core focus.
And this might be a stupid question, but there you are providing a workflow automation service. How hard is it to use? Do you have to be able to work with Python and other codes in order to work with the system, or is it deliberately designed for even everyday lawyers to use?
Yeah, again, like when we started the company, we wanted to make sure that ultimately anybody using our solution could use it quite easily and configure it without needing to be a programmer. I think that's the key thing here. And we've seen over the last couple of years this movement starting called low code, no code movement, which is effectively products being built that can be provided to people to then configure and fit together to create business models and businesses with almost zero programmers and programming experience. And it's a journey, so it's not something that can be achieved immediately. It's a very complex thing to solve, but we're on the journey there. So there are aspects of our solution that can be configured through the front end by an end user without programming experience. There's some aspects of our solution that still requires a little bit of understanding of how to edit files like a JSON file. So you need a little bit of programming experience there. Where we want to get to, which will take a couple of years, is full no code, low code, no code. So literally ensuring that we have a product which is kind of like, Lego, and clients can put all this Lego together, these modules, services, etc., very, very easily, and then just take it and deploy it wherever they want and run a business, run a process, generate workflows that they need. That's where we want to get to. I think this is also beneficial for technology teams within banks and market infrastructure and law firms, because they're having to spend a lot of time performing due diligence on different solutions, understanding how to do the configurations and customizations and manage it. But actually, if they didn't need to worry about the business level things that need to be done on the solution, they can worry more about maintaining it, performing operations on it, providing support, and actually then integrating and managing and creating other solutions that can interact with it.
Lego 1.0, at least the one with the bricks. Some of these new Lego models look extremely complicated and non-standardized to me, but I know exactly what you mean. Scott, you joined Nivaura, I think, earlier this year. Something must have attracted you, but it's become obvious to us that future of finance is actually becoming quite a crowded field. We've got Agora, we've got CapEx Move, both when we've spoken to, there's Origin Markets. There's even the long-established business of Iprio, which started to develop investor capabilities a few years ago. Now all of them clearly see the primary debt market process as ripe for automation. Scott, what persuaded you that Nivaura was the right answer, and what do you think is going to determine adoption of the solution over the next few years?
So it's an interesting question because exactly as you point out, right? Getting to choose, which is a wonderful luxury about where you spend your time. What attracted me to Nivaura was the fact that, like all early companies, the founders are passionate. So I thought that was interesting, but that's probably true of all the companies you just mentioned. But what I thought was particularly interesting for me, and it's a bit odd given that I am a poor technologist, but I like the idea that they started in one spot, very tech heavy DLT, which I often characterized as a cool technology in search of a problem to fix. I think they identified exactly where it could be used and could be used credibly. They did so, as I mentioned earlier, in that regulated framework, which is also critical because as much as we like to apply new technology and new thinking to financial services is heavily regulated. It's arguably the most conservative place to operate. Why? Well, because it's your money, it's my money. Governments want to keep that safe. So consequently, being able to introduce new things in that framework, you have to be able to do it showing that you can apply the rules and do so. So I was very attracted by the fact that they had started in the FCA sandbox with the DLT product. And then I also really appreciated that pivot into something which was more usable today and not waiting for the future. So that was what really attracted me to Nivaura. And that's certainly not to take away from any of the other firms you mentioned. I know some of them very well, and I'm hugely impressed by their offering as well. But I do think that there's also a difference. I think it feels like, at least to me, that the workflow tool is different than a market-driven tool. So we're less about creating a place for those bonds to trade, notwithstanding the fact that we have deployed a product that's based on our core code to LSEG, London Stock Exchange Group. But that product isn't about trading. So I think that the answer is there's room for more than one operator. Ours is very much focused on the workflow element of it. And I think that the way winners will arise is through both delivering value for money, so that we actually do address the problems that we think are there and that we've identified both on our own, but through conversations with clients. But also that the product itself is flexible enough to deal with what the future may look like. And I know you're a passionate reader, as we were discussing before this. Many of the things, many of the philosophers will point out that humans are particularly bad at judging the speed at which innovation occurs, particularly in the near term. I definitely fall into that. So I think people are beginning to look for technology which can both address today's problem, but also address tomorrow's problem, because we don't know how fast tomorrow is coming.
Should I be surprised you didn't mention network effects as being important to the rate of adoption? You mentioned value for money, but having people on the network, how important is that going to be?
I think that's important, really, for an ultimate vision of these platforms connected and talking to each other. But in many ways, I think the solution, and Vic, you can jump in and correct me where I'm wrong or add to it, but is each instance of Aurora can work very well. So when I think about it, because of my background in banks, I think of it as a tremendous workflow tool as you sit at the desk and you're trying to manage the process. You're a debt capital markets originator, you run syndicate, or you're the risk officer associated with looking at it. The fact that I can then be part of that process throughout really only needs my bank ABC, to own the platform. It doesn't really require that another player own the platform as well, because they can attach to it when we're working on it. I don't know, Vic, do you have something that?
No, that's absolutely right. And we've also focused on ensuring that we are building our product with interoperability in mind as well, because we know that some processes and operations have existed for years and years, right? Sometimes 20 to 50 years in banking. And we don't want to come in with a technology and a product and say, here's a big bang change everything that you're doing now, because there are repercussions. Mm-hmm. And what we wanted to do was say, look, we understand your challenges, and every day we're gaining an even deeper understanding of those challenges. We want to provide you with technology that you can use immediately to solve some of these, but also that we can work together on in the longer term to solve the rest of the challenges you're having. And so we've got something which they can deploy and use straight away, but also their customers can interact with it both on the platform, but also off. We've got tools that we've been developing around offline communication. So the platform, the product automatically sending messages out through an email, receiving responses back. That requires the person on the other side to not have to change anything they're doing. We've also been developing capabilities around data extraction. So data coming in doesn't have to always be structured. It can be unstructured. It could be in the document or PDF formats that they currently are in. Our solution can still extract that data and insert it into the workflow. So for us, interoperability, not just from the perspective of making APIs available for everyone to connect in, but actually interoperability means allowing information to be shared with our solutions through existing channels, email, PDF, etc. And that's very, very important.
Vic, I'd like to clear one thing up. Scott has pointed out that one of the reasons Nivaura was attractive to him is because it clearly understood how to operate in the regulated space. He referred to the fact you began in the FCA sandboxes. And I think that's how a lot of us remember the origins of Nivaura, operating in those sandboxes, tokenizing bonds on blockchain, issuing cryptocurrency-backed bonds on Ethereum, working with London Stock Exchange on equity settlements on the blockchain, proving all those things work. And as Scott has indicated earlier in this conversation, Nivaura clearly started thinking that blockchain was the right answer. But in the end, you've pivoted, as he said, to the conventional sort of on-premises cloud-based options, which you, Vic, described earlier. What does this tell us about what Nivaura really thinks about blockchain now? Is it kind of all over for you between Nivaura and blockchain, or are you kind of waiting for the technology to get to the point where it becomes something practical and useful that people can use in their offices today?
I think a blockchain or a distributed ledger solution, it could take many different shapes. But ultimately, we never expected or thought that a blockchain could disintermediate everybody in banking and could replace all of the technology infrastructure. What we were doing with our sandbox experiments, sandbox 1 to 5 actually, was we were feeling around to see what the blockchain could actually do and not do. I think one of the great successes that we had was we became regulated within the sandboxes. We got restricted permissions, which were then lifted. And those permissions, MiFID and CAS, allowed us to issue bonds that were also tokenized on public blockchains. So we used Bitcoin and we used Ethereum. And they were done in a legally compliant way. So in fact, the Ethereum issuances, where we issued tokenized and crypto-denominated bonds on Ether, they were both legally compliant. They had legal documentation around them. They were the world's first legally compliant tokenized and cryptocurrency-denominated issuances. And we did those within the existing regulatory framework. We didn't need there to be any changes of how instruments are understood and managed. And so we showed that under English law and regulation here, bonds can be issued under the regulatory environment. They can be issued and tokenized. The key thing though is the technology we used is, while we used a public blockchain, we were still developing products that could do all of the pre-work and then execute and create a tokenized bond. And that's the key thing. There was so much tension over the blockchain side of things, which was a lot of fun and very, very important. But actually, in order to create an instrument on any infrastructure, whether it's a distributed, decentralized, or centralized infrastructure, you need to have some kind of workflow solution that people are interacting with to create the instrument. Creating that instrument means creating the legal documents, agreeing on the price, blah, 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 signing off, then sending data to a registration system. So while we were doing all this stuff in the sandboxes, what we were actually really focused on, apart from that, was building out the core product. And so we used those sandboxes as a way to prototype different things that we would need in that workflow solution, as well as experimenting with novel ways to register and transact tokenized securities. And so I'm quite pleased with some of the groundbreaking stuff we did in the sandboxes. We put them on pause for a couple of years because I think we were a bit too early. The infrastructure didn't catch up by that stage. And it was very, very difficult to move forward and do more experiments with larger firms and encouraging them to use a blockchain. Now things have changed in the last 2 years. Now we've seen large infrastructure firms, the likes of State Street and Bank of New York, invest in blockchain companies. But I can tell you, when we first opened our custody accounts with Bank of New York, we had to present to a whole variety of people there. We were the first blockchain company to interact with them at that stage. And we were able to open accounts, but it took about 6 months to do so. Now, it would be really quickly. And the fact that they've invested, it shows how far they've come and how far the industry has come in the last 2 years. Now, separate to that, you still need some kind of solution deployed somewhere that can do all this work up front. Maybe in the medium to long term, all of that can move onto a blockchain, but we're not there yet. So it's very important to kind of differentiate. Here's a solution or a number of solutions that people are going to interact with to create instruments. That interaction can come directly through to the solution or through a centralized or distributed network. Then once the instruments are created, they can either be put into the existing system, so through the IPAs, CSEs, etc., or they could be put onto a distributed system with those entities potentially on there as well, providing governance and support services. So I think it's quite a complex thing to get around, but in short, we haven't put the blockchain stuff to the side. We paused it because we wanted to make sure the industry was catching up as well. We still think there's a huge potential for the use of this kind of technology in capital markets in the long term. And we really are, one part of our focus in the future will be to use a blockchain or use a distributed network with some core partners.
Just so I'm absolutely clear about what you're saying here, the reason you pivoted away from blockchain or put it on pause, as you say, is because the industry wasn't ready to adopt it. There was in your mind, no fundamental engineering obstacle to its adoption. And I'm thinking here particularly of scalability.
So I think for us as a startup, we go through this journey of finding product market fit. So we do a bunch of different things. We take the good from all of those, dissect the bad, and then try to combine them into a core product. And so we decided that core product that we go to market with has to be this Aurora solution, this workflow, low-code, no-code product that can generate traditional instruments, but also in the longer term plug into a distributed or decentralized infrastructure. So that was for us, one aspect of the thinking was, let's just focus on the thing that is going to be the most value add in the next few years. The other aspect is, yes, to put it on pause because we needed to ensure that the rest of the industry could catch up. By the time we got into Sandbox 5, we were in Sandbox 5 with 2 infrastructure firms, a listing venue, an exchange, and a CSD. And we could not reach an agreement on how to proceed and what to use and how to do it, because it was just, at that time, we're talking two and a bit years ago, the thinking hadn't matured enough across these organizations because they're so big. But times have changed, right? Now, 2 years later, we're seeing lots of market infrastructure firms getting into experimenting with this kind of technology. So the time is quite right now, I think, for us and for other companies to again bring the blockchain aspect back into the core solution.
Right. So it's the obstacle is commercial. It's not an engineering obstacle ultimately. No.
There are some engineering obstacles, to be honest, but if we're looking at primary issuance, I don't think, technically volumes are not really the issue. I think the main obstacles are more commercial and business focused and information security and that kind of stuff. I think InfoSec and, I think technology, the tech is novel. It's really, really interesting. There's lots of developments being made on networks like Ethereum and Corda. But in my personal opinion, I don't think technology has been the major challenge in the last 5 years. It's been business.
Right. Okay. Well, that's clear. Thank you, Vic. Now, Scott, you're the legal expert at the firm, and one piece of IP which Nivaura did develop and has now made open source is the general legal markup language, the GLML. Can you tell us how that works?
Sure. Well, I can tell you a little bit about it. Vic is really the brainchild, or is the father of that. But it's basically a taxonomy that the firm developed And the real goal behind it is to not have multiple standards in terms of how you interpret, what constitutes, bond price or coupon or, floating rate. And the idea is to bring it all into a single, everyone agrees nomenclature. And that's really also why we put it in the foundation, because the idea is if it's too tied to a firm, then of course, your competitors won't use it. Hard to get other industry bodies behind it. And that's really, I think that's key generally to the whole process of digitization. To make an analogy, if we go back and look at the requirements under MiFID II for data being available, effectively free to air price data, 15 minutes after a trade, everybody seems to have it in a slightly different format. It's you have to scrub a bunch of different places to find it. And now 4 or 5 years after MiFID II going live, 3 years, however many years it's been, sorry. But is the idea that now the European Commission is having to go back and rewrite the regulation such that it forces a bond tape, a trace-like tape for those prices. And that was something that we wanted to address as well with GLML, is get everybody to agree what that standard is, because then everybody will hopefully use and move to a digitized standard. And as I think Vic said earlier, one of the things that we were thinking about in the Aurora product itself was we didn't want to force people to use our version of the world. So by releasing GLML into the wild, as it were, the idea is that, look, you can access that language and use it on Origin's platform, as an example, or on the Agora platform. And so the idea is really just to make it a standard. Vic, I don't know if you want to have something to add to that, since you are the guy who came up with it all.
GLML came up, we sort of came up with the idea in reaction to some of the things we had heard from lawyers 4 or 5 years ago. Because we were thinking, if we're going to create a solution that can facilitate the creation of financial instruments in a more digitized, automated way, we needed to figure out how to structure the data from the beginning, like create structured digital data right from the beginning. And so in our hunt to look for that information, we thought there are programs, prospectuses that law firms create. They're doing these in Microsoft Word. They're sharing them. People are typing in those markups, etc. Is there a way for us to just put a digitized framework around that and then use that to generate workflows? And so that was one of the key things we were thinking about. And I remember going through a couple of bond documents and just thinking to myself, why am I doing this? I shouldn't be the one doing this, right? I don't know anything about law. I'm a mathematician at heart. I'm a liability and everything else. So we were thinking, why can't we just figure some way out to give a tool to the lawyers to use themselves, the experts in the documents, to be able to digitize those docs themselves? So we started talking to the law firms. And every single lawyer we talked to would say they'd love to do that. They liked the vision. It made sense. They'd love to do it. The only problem is every time they've tried initiatives, because these law firms, a lot of the law firms by that stage had tried to digitize and automate how they assemble documents. And every time everybody said to us, look, we've had to work with technical teams and we've had to tell programmers what to do, or we've had to learn how to code a bit. And it just ends up becoming so long and complicated that we never really get any efficiency. And so it's better for us to just go back to drafting and managing documents the normal way, because it saves us time and we're familiar with it. So that's why we thought, look, we need to create something very simple. And we took influences from languages like Python. We also took influence from a typesetting software called LaTeX, which we use in academia. And we kind of put a few things together and came up with a syntax for GLML. And as Scott said, there's a need for the creators of this data to agree on a particular data standard. So to agree that if I put this tag, this syntax into a document, it needs to mean a particular thing to everybody. So there's a need to agree on that. There's a need to have a shared syntax that everybody can understand. The GLML is so easy for anyone to understand. You look at a tag, you look at the logic that can be written through GLML, it's very easy. You don't have to be a programmer to get it. And so those were the two core aspects: creating something that a lawyer could put into a document really easily, but also making sure everyone understood that underpinning that, there needs to be a taxonomy of data points that everyone agrees to as well. At that stage, and even now, there have been so many different data standards in capital markets. There are new ones being created probably every couple of months at this stage. each one purporting to challenge, tackle a different part of the process, a different challenge, etc. But actually GLML is the first data standard that can be input into documents where the data begins in the first place by the legal experts who create those documents. I think this is really key. Once that's been put into the documents, GLML can be mapped to any other data standard. So if different solutions or different companies are using a system that requires a different data standard on that system, they can very easily map from a structured data document that's written in GLML to any other data type. And that's why GLML is actually an enabler for the entire industry to create more digitized and streamlined workflows. That was the point of GLML. And as Scott said, this is why we put it into a foundation and made it open spec, because we really believe in it. We really believe in the ability for GLML to actually defragment the data standard problems in capital markets and enable not just us, but a whole host of other companies to then create more digitized and automated solutions using the data that's digitized right at the beginning. And so GLML has a really big purpose there. I think it's a bigger purpose than what Nivaura is doing. It needs to be driven by the market. We've handed it over. It needs to be driven by the market and owned by the market in order to be successful. And we hope it is, but at least we think it's on the right track.
And that right track, Scott, I mean, Vic's been pretty clear, you need agreement, needs adoption, the industry needs to start using it. How confident are you that GLML can become a kind of industry standard for digitizing documents?
I'm reasonably confident. Look, there are always going to be hiccups, and as Vic mentioned, it seems like there's a new standard born every couple of months, trying to address some specific aspect, and we see it and have seen it over time. I think the good news is, at least in the early days of the foundation, we've seen a lot of engagement from industry. We've got a handful of the Magic Circle law firms as part of the foundation. A bunch of different actors in the market generally have been part and parcel and have been on the calls with the foundation. So I'm hopeful and reasonably confident that in fact the uptake will be good. And I think one of the things that was very prescient, very forward thinking of Vic and the team was to start at that point of where lawyers start, which is funny enough with a Word document, right? Lawyers are about as habit built as traders are. Having sat in both of those seats, you tend to get used to one way of doing things, and that's the way you want to go back and do it. And starting with a Word document, and they've engineered a Word plugin, which we will release in the next quarter at thereabouts to the foundation once we've perfected the Word plugin. That will make it even easier for lawyers to actually GLML the documents associated with a bond offering. So I think it's pretty exciting. My fingers are crossed that it'll all go the right way.
Yeah, well, it's never easy to get people to adopt a standard. Could I just clear up one thing? Is GLML jurisdiction agnostic, or is it English law only?
It's jurisdiction agnostic. Just like code is jurisdiction agnostic as well. I mean, the GLML is really for non-programmers to digitize a normal document. Doesn't matter what jurisdiction or even language it's in. We're looking at supporting other law firms and legal teams to GLML German documents, even some documentation in Asia as well. So yeah, GLML is not restricted to even the industry in the long term.
Yeah, now you've said, Vic, there's a lot of unstructured information out there. You both said there are multiple standards appearing to solve particular problems in particular areas. Would it help adoption of GLML if it could be mapped in some way to other existing widely used standards like FIX and FPML and Swift, or is that irrelevant to the success of GLML?
I think it's very important. We've actually been working on some of this already. So we've been internally, we've already done some mappings to FIX protocol. And FIX, of course, used especially for data transaction or data transfer between systems. We're also heavily looking at how the GLML could support the adoption of CDM, the common domain model, developed by ISDA, and also in conjunction with ICMA now as well. And so we're looking at how GLML can actually drive the adoption of things like CDM by allowing CDM to be expressed and written into legal documents really, really easily by law firms and lawyers using GLML and the word plugin. And again, remember that the reason why all these data standards are being created and developed is firstly because all of the manual effort to create data points is people typing stuff into systems. It all starts by people looking at a legal document and typing stuff into that legal document, whether it's a term sheet or final terms or something else. And so by digitizing that, you're actually solving a lot of the problems downstream to begin with. The other thing is as well, ownership. A lot of companies are competing on data standards too, which is a challenge in the industry. And one of the reasons why we put GLML into the foundation and we have engaged with firms who are competitive, not just to each other, but also to Nivaura, because we want to show that for this to really take off and for the whole industry to benefit from a data standard, everybody has to get on board with it. It's not just about a couple of firms developing something over there and then other ones going over there and creating another standard. Everyone has to be on the same page this time. Otherwise, fragmentation will continue.
Now, Vic, I noticed that you're also on the ISO 20022 working group at ISA. Where does that standard, that ISO 20022, fit into what you're doing?
I'm a big fan of ISA. We joined a little while ago when the new CEO took over, and they've been doing a great job before that, and especially now on engaging with security services firms in the industry, understanding what these firms need, and then going and doing the research and publishing suggestions and educating the members. I've been tried to get involved mainly on the DLT side because that's where our expertise, DLT and issuance side, is of course the majority of where our expertise comes from and where we can contribute. But of course, recently I've also been able to contribute a little bit on the ISO standards side as well. So I'm supporting two of the groups there on DLT and ISO around the understanding. Again, this is around data and data standardization, but as well as identification of instruments. One of the challenges now is that now that tokenized instruments are becoming more prevalent and lots of different companies are creating their own versions of DLTs, networks, instruments, etc. Mm-hmm. The challenge is, how do you identify what is a financial instrument? And how do you share that identification of that financial instrument? So of course, traditionally you've got ISINs and QSIPs, for international instruments. But what do you have for a blockchain tokenized instrument? A lot of work has been done by ANA, the numbering organization, a few other firms who have come together and created industries. But also on the ISO side, there's a lot of work that's been done around understanding existing business processes, describing how messaging should be done between different systems, etc. But there's actually very little overlap between those two. And now that I've been supporting bringing the two groups together within ISA, we can actually see how little overlap there has been today. So quite an interesting thing that's happening there is an investigation into the data standards and the identification of instruments and the identification of business processes required to create those instruments is now becoming a cross-collaborative piece. So yeah, very, very, very interesting times there.
Stupid question for you, Vic. Can GLML fit into ISO 20022, or does it need to be adjusted?
GLML can be aligned with ISO standards in general. I believe it already is. But it's something that we will be working on in the actual foundation working groups over the next year or two. ISO 2022, I just call it ISO 22 for short, to be honest. It has not achieved wide industry adoption yet anyway. So it's just because while a number of firms have agreed to it, it is very difficult to adopt something straight away. So there is still a bit of time. And GLML, it's very important for GLML to the syntax and the taxonomy itself is agnostic to other standards and industry bodies suggesting how to put information together. It's really the next step after that. So once you have a syntax that everybody can use and you have a taxonomy that everyone agrees on and is aligned with other standards, how do you then put these two things together and put together messages that are aligned with global standards? And that's the piece we want to look at in the foundation. It shouldn't be a complex thing. It should be quite straightforward because of the nature of the way GLML has been created.
Right. Okay, that's clear. Scott, Nivaura has this history with the London Stock Exchange, right back to those sessions in the sandbox, as it were, and it's clearly the flagship client of Nivaura today. It's the main user of Aurora. Are you doing anything else with the London Stock Exchange Group apart from the Aurora workflow product?
Well, at the moment, that is our core product with them. It's called Flow. We work with them regularly on developing that further. So new features and also marketing to clients, their clients, our clients. So we continue to work with them. And what's really fun, at least for me, in having LSEG as a partner, both as a client and an investor in Nivaura, is that their door is always open. They're willing to have any and all conversations, both around the product itself, how it develops, where we should be thinking about product improvement, but also about more future things. So I was speaking with one of my counterparts at LSEG yesterday about thoughts around DLT and using the Aurora platform as an on-ramp or off-ramp in the future for fully digital or fully DLT transactions. So those sorts of conversations are ongoing all the time. They're an excellent partner for us to have.
Now, Aurora is also in production with DBS in Singapore. Now, DBS is a bank, not a stock exchange. They must be using this in the primary debt markets, presumably in some different way. How are they using it compared to how LSEG is using it?
So they're using it as both an internal workflow tool, but also as almost a storefront where their clients, who are corporate issuers of CDs and short-dated debt, effectively, can come to them, and the investors can say, yes, I'd like an exposure to this issue at this rate and this tenor, and it makes the negotiation in that format very easy. So they're using it kind of in a hybrid workflow and shop window format.
Now, Vic, you've obviously been with the company since the outset. You identified primary capital markets as a clear case of an industry which needed digitization and automation. But here we are, 5 or 6 years on. The bond markets don't seem to be in a great hurry to move onto better systems, despite all the work that you've done and the right back through those proofs of concept in the regulatory sandbox. What does that tell us about attitudes and incentives inside the bond markets, that it's not, biting off your hand or indeed the hand of your competitors to really improve things? What's really going on in the marketplace that makes adoption slow?
I can talk from a technologist's perspective predominantly. I think that adoption of any new tech in any industry is always going to be difficult by large incumbents. Banking is no different. Banking is probably a little bit, like capital markets, investment banking, probably a little bit behind some of the other industries like retail banking and other sectors. But there are still very, very similar challenges. It's a complex field, overlaps with law and regulation. So there's a lot of questions that need to be answered before a large incumbent bank or infrastructure firm is able to deploy new tech, let alone deploy something like a blockchain or wide governance over a blockchain. So it's quite complex. It takes time. Mm-hmm. I think on the other hand, if you look at what's happened during COVID, there's a wide agreement that the bond market actually worked quite well when the window opened up, funding windows opened up. I think it was earlier this year and last year. Everyone was able to issue quite quickly and meet funding requirements. So there's also this question of, there's a lot of things that work quite well with the existing system. There's also a lot of things that can be greatly improved by tech. It just takes a bit of time for the alignment between those who are pushing new solutions, innovative solutions, and those who are the incumbents, understanding and adopting those. From my perspective as an outsider coming in and developing and deploying technology here, while I was in banking before, I wasn't in this specific space. I think the adoption is pretty much going as well as you could hope for. I don't think this could have gone any quicker. I'm actually quite impressed by some of the developments over the last year or two, especially with some of the market infrastructure firms and their investments and their adoption or their testing of blockchain solutions. I think we'll see I think we'll see maybe a more exponential increase in the use of these technologies over the next 5 to 10 years, and potentially a production adoption shortly thereafter. There are companies like Six who created SDX, the digital exchange, and got that regulated separately, and will start to do listing and trading of tokenized instruments there. So, there are some that are ahead of others, but I think we'll see a widespread adoption over the coming years.
A minute ago, Vic, Scott mentioned one of the things that he really enjoys about working with LSEG is that they're always thinking about the next thing. What do you see from a technological point of view as the future use cases for the work that you've been doing? And I'm thinking here particularly of Sandbox 4, where you did that equity capital markets project with LSEG, if memory serves. Do you see the equity capital markets as a future use case, or have you got other priorities before you get to that one?
Equity is complex and quite different to debt, I'd say. I think debt, create a program and you can do multiple issuances from that, whereas with equity, you kind of create the documents once, issue equity, and then it gets traded somewhere. So I think for us, for the foreseeable future, or at least for the next few years, we're going to really focus on debt and the complex debt instruments, as Scott was saying, moving into derivatives and structured products as well. There's a lot of work that could be done there. There's a lot of ideas we have around how to automate a lot of these activities, and we really want to focus on developing and deploying technology to banks, market infrastructure, and issuers for them to really automate as much of this work as they can, so that they can focus on more high-value tasks rather than manual data entry and data exchange. But I think that we will see, especially from Nivaura, we'll see a lot of more, let's say, as the company grows and develops and moves further along in its life, especially under the guidance now of Scott, I think we're going to see more innovations coming out in different spaces. So what I can say right now on the blockchain front and all the other things we're working on around machine learning, etc., I'd say watch this space over the next few years, because we have a lot of things under the hood that we've been cooking, and we're just looking for the right people to come on board and help us to expand and to grow into these.
Now, Scott, how would you characterize Nivaura? You've joined relatively recently. What did you think you were joining? Were you joining a kind of new model financial market infrastructure, or were you joining a collaborative network provider, or were you joining a technology vendor, or were you joining something completely different to that? What character would you ascribe to Nivaura today?
That's interesting, because I think my original attraction was it was almost a think tank. The background that Vic and Avtar shares, they're both academics, right? They're both PhDs in, Avtar in physics, Vic in mathematics. So certainly things I can't touch. But it was fun because they think about things truly, I would argue, from an academic standpoint. They get intrigued by a problem, they want to solve the problem, and they can go very deep into a problem and get very complex very quickly. So in many ways, when I first joined, it felt like I was joining a think tank, for want of a better description. Mm-hmm. As I got to know them better, and as we spent a lot of time together talking about how you then commercialize all these things, I realized that what I'm really joining is a best of both. It's both a think tank, because they are very forward thinking, but it's also very much an enterprise software firm. And the idea is that we want to build software, and we want to build great software. And that's part of the path that we're on, right? We're trying to get better at building software, at delivering it quicker, faster iterations, because then that leads to more client features being added in real time. But it's taking that mindset and combining it with the academic mindset. And that's really what I think I joined, and it certainly is what it feels like at the moment.
I think what academics always lack is the commercial brain. So academics come up with ideas and they can go down different rabbit holes to figure things out. But while ideation and coming up with ideas is good, without having an understanding of how to commercialize those ideas and really sell them, I think they miss a lot of value there. And so the commercial aspect and the ability to be able to productionize something and ship it out really also adds a lot of value to the idea creation stage as well. And I think it's really important for not just Nivaura, but any tech company, tech startup, to have the best of both. You need people who are going to be thinking about things theoretically, but also others who are going to think, okay, now that you've got this idea, how does it relate to the real world? how can we make money from this? How is it going to solve people's problems? I think that's really important.
Now, I have one last question for which I'd like a view from each of you. In fact, Nivaura, as we've discussed this afternoon, has been a pioneer. You were early into blockchain. You did these proofs of concept. You proved the technology could work within a regulated environment. But then you've also had this pragmatic pivot more towards technology which potential clients can actually use in their business today to make things cheaper, better, faster, less risky. Can I ask each of you how quickly you think the conventional securities markets, and I mean to include equity here as well as fixed income, how quickly do you think the conventional fixed income and equity markets will be displaced by tokenization, by security tokens? Vic, perhaps you could give me your guess first.
I think I can speak maybe partly from the ISA hat on. I think there's a real appreciation from especially infrastructure firms. There's an appreciation for where tokenization could go, and they're really seriously thinking about not only how they can adopt it, but how they can potentially even take it to the next level. And I think now that we've seen banks and issuers over the last few years experiment with tokenized issuances, largely without the infrastructure firms participating. Now we're beginning to see the adoption by the infrastructure firms. I think we're going to see serious work being done in this space over the next 5 to 10 years. I don't think it will come immediately, but I think it will happen. Mm-hmm. And I think it will happen probably across the board. I still think debt is an easier one to work with, but I think we'll see equity and debt both being tokenized, let's say, and traded quite frequently on blockchains. And you'll also see an adoption probably of DeFi over the next 10 years. I think that's the next big thing.
Mm-hmm. Scott, what's your view? You've heard Vic say that there you are, you're in the primary debt markets. It's the primary market where tokenization is going to be driven from. What's your best guess as to how soon we'll be looking at massive mass adoption of security tokenization?
So I tend to be a little old-fashioned. I think it will take a lot of time. I think you'll see it more in small snippets, perhaps, and it's certainly no sooner than 5 years out, in my opinion. But I think you have to begin to prepare for it, which is also what's interesting, right, about software development today, is that it becomes very modular, so you can actually bolt on things without worrying about denigrating the old and making it all work well together. So I think it's a 5 to 10 year time horizon. And I think, something you alluded to earlier, Dominic, is the idea that certainly DLT and blockchain in and of itself doesn't yet lend itself to high frequency transactions. So in that sense, equities definitely and FX need to sit on the sidelines for a little while longer, which is why I think Vic and Avtar were particularly smart to look at fixed income, because it truly is the spot, right? Most bonds trade actively for the first 7 to 10 days after issuance, and then trade episodically after that. Mm-hmm. So when we see the development, it will become first in primary and then secondary debt, and then equities, and then FX, I suspect. But as I say, I think that's a 5 to 10 year horizon, certainly in my opinion.
Scott Eaton and Vic Arulchandran of Nivaura, thank you both very much.
Thank you.